Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, good morning, good morning. Welcome, everyone, to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin is back. Dennis Dick with you this morning. We got a lot to discuss here. There's a lot of headlines from over the weekend, right? We're going to talk Bitcoin and crypto and every crypto going down except for the one that matters, which is, of course, Dogecoin. We're going to talk Peloton this morning. We're going to talk Ride. We might talk Pinterest. We got some earnings from Coke and Harley Davidson. We have an M&A deal on our radar and two guests today. First up, Tim Quast will join the show. He joins us every Monday, the founder of Market Structure Edge, and Matt Hammond, who is our IPO guy from IPO Warriors, will join us at 9. Today's show is also sponsored by Market Structure Edge. I'm going to put the link up on the screen to check that out there. It is the first decision support platform for traders built on market structure. To learn more, go to marketstructureedge.com. Hit the like button for Joel, guys. He's back. He's back.
Hey.
Oh, how are we doing?
We're doing okay, Spencer. You're awful chipper. You must have had a double cup of cappuccino with espresso in there. You are fired up today. Usually on Mondays, you're like, oh, but you're raring to go. It's good. It's good to see. We'll just run down real quick. I know people aren't real interested in the indexes or gold and silver, but SPOs are down. 11 points, 41.65. Crude's down 18 cents at 63.01. Gold up a smidge at 17.82. Silver going the other way. Bitcoin, the futures are down, reflecting that close on Friday. Took a little hit. We can discuss that news, but that's it. It looks like a busy Monday here in the markets. Triple D, I have a new indicator for you.
Okay, give it to me. I'm glad he did something over the week. He's come up at least with a new indicator because he had the whole week off here, obviously enjoying himself in the sunny south while we're fighting the bitter cold up here still on Georgian Bay. So first, before you give us the indicator, tell us how your vacation was.
Oh, I don't want to tell you. You get so jealous.
I'm so jealous already. Even when I saw the empty flight, the picture you sent me, I was still jealous.
It was unbelievable. The weather was unbelievable, right? and beaches, walking, marine center,
You're busy down there?
swimming. Was it busy down there? No, I wouldn't say super busy because
The plane didn't look busy.
Yeah, after spring break, I mean the airports. I mean there was some hustle and bustle there, but not super busy, not super long lines at the at the clearance points. But it was just good weather. Swimming every day, walking every day, just hanging out in the pool, and that's where I came up with my new indicator.
What is the new indicator?
Oh, someone was listening last night. It's the guy at the pool indicator.
What's the guy at the pool indicator?
I guess it's kind of similar to the cab indicator.
What was he talking? It's what he was talking about?
Yes, he asked me, and this was, what day did the market actually go down? It's been down 2 days in the last 13 sessions. And he's like, "Why is the market down? Why is the market down?" And I'm like, I look at my phone. I don't know, Spoos are down like 10 points, and I'm like,
why is the market crashing?
Exactly, and I'm like, well, market. It's good for the market to take a little breather. I got some weekly options. I got some weekly SPY options, and they were way up this morning, and I didn't sell them, and now they're not. And I said, well, don't worry about it. I said the market will go up tomorrow, and it will probably go up. It will go up. It will probably go up on Friday. I'm like, and I go, and why do the weeklies? I mean, the time evaporates. Give yourself a little more time. And then I don't know. I think he dumped them on the open on Thursday or something and missed the rally on Thursday and Friday. So I'm not calling a top, but until we take out, I got a level for everyone on the upside. I'm gonna keep it to myself, but I got a level on the upside. We haven't seen it yet today, but if we can't get above there, maybe I'll look for a little bit of correction. But there's just no volatility. There's no
killing me.
Yeah. It's real. I mean, it depends, on what stocks. Not like if you're trading Ride or Peloton or something.
Well, those don't have volatility either. They just go straight down. Rides and all the SPACs. I mean, they're down every single day. The market goes up, the SPACs go down. The market goes down, the SPACs go down more. I mean, it has been an awful month and a half to 2 months for the SPACs. I know I have a few of them still. I wish I didn't have any. Fisker, one that I rebought at 16, mistake, 13. I don't even know. I should just probably dump it because they all seem to just be continuing to go down. They're also oversold though, Joel.
I got someone that's bullish. And
who? On Fisker? I've been bullish Fisker, but it doesn't matter.
I have someone that I'll bring him on later in the week. But and he's pretty good at calling some market turns.
Sean.
I'm not making any comments.
It's Sean, because I know it's Sean. He was talking to me about the SPACs too. And Sean's the number one contrarian we have out there. If the stocks are going straight down, he's buying. If the stocks are going straight up, he's short. And he has built contrarian more than me and you, Joel. That's Sean Udall. I'm guaranteed it's Sean Udall.
No comment.
It's Sean. We all know it's Sean.
No comment. No comment.
Sean usually gets it right in the long run. I
know. But this person was like, I gotta come on Friday. And I look at some of the charts. I'm like, I don't know. We'll see about Monday. And then when I saw what they did on Friday, and I'm like, but we'll bring that mystery person on later in the week and take a look at him. He's even got me a little bit interested. But what do you want to start with this ride?
I want to start with Ride.
Oh,
Spencer, it did not finish the race, apparently.
Right, and that's what we said. It was like they don't have to win the race, but they should probably finish the race.
They couldn't finish
the race. And they couldn't finish the race. They made it 40 miles out of
how long was the race?
Out of how many?
290.
Oh man, I only made it 40.
They made it 40 out of 290.
Stocks are making new lows. You gotta go. This is breaking down. We know our friend Marcus has got some puts still written on this. He is somewhat diversified. Marcus, I'm feeling for you, buddy. This is just the story of all SPACs. So it's not just the story of Ride. It is the story of any EV SPAC. They go down every day. They are all massively oversold. but you get these little bounces, but it is bag holder central in all of these stocks. I'm now a new bag holder in Fisker. I've been up with this thing since birth, and now obviously I sold and then I rebought it, and now I'm down with it too. Same story. I mean, they have a red candle every day. There's nothing more consistent than SPACs going down. Fisker, Ride, you name it, it's back. QS obviously had the short seller report. That looks like it's ready to break down again. $120 beginning of the year. It's $34 now. Romeo, whereforth art thou? That is $8.25 now, continuing to go down every single day. You name the SPAC, it's pretty much been attacked.
How many people or how many traders do you think or groups set up people on the side of the road during that thing? And then I don't know, when did it actually go off the road? Do we know? Because I'm sure they were waiting at the 4 a.m. open to hit that thing. It happened over the weekend, right?
Yeah, it was Sundays when. Well, I don't. It didn't go off the road.
Okay, I'm sorry. I didn't.
Yeah,
I didn't mean to say that. It didn't.
No. They just had to withdraw from the race. So,
wow.
Well, it's just like I said. It's just they don't want to own these things. They're all. The problem is this market turned 2 months ago to value. The things that have very little value are concepts that don't have revenue, and they've hated those stocks. I mean, space. SPCE, I've sold a lot of these, and I was bullish space for a long time, and you have to get out when it's the story turns, because it was built on story. Story has went ice cold, pun somewhat intended for space because it's cold up there. I'll spell that for you. But anyways, space, I think it goes lower. I just, the story's cold. They have really no revenue, maybe some pre-bookings. I mean, it's tough to be an investor in these things until the story turns around. At least let the stock stop going down. Trying to catch the falling knife on all these stocks, all these SPACs that have very little revenue. It's tough. There's no the valuations just aren't there. You can't even value them because you don't know where it's going to be. Is there a product here eventually? I think there's a product with a lot of these companies, but where is the valuation tie-in? It's potentially a lot lower when you look at from a valuation perspective. If you project out revenues, and with the story cold and the market turning to a value invested market, it's tough to own these stocks.
How can you stay in these then in your long-term portfolio? I mean,
you've
sold.
I sold space. I sold Fisker. I rebought Fisker. So if you looked at my portfolio in January, I think I had 40 SPACs. Yeah. If you look at my portfolio now, I think I have 7. And a lot of those are $10 SPACs that are just hugging the $10 line. The ones, and we're putting space as a SPAC. It's no longer a SPAC, but it came from a SPAC. Right. But it came from a SPAC. So even the ones that aren't, they're post-deal, but they came from SPACs, those have obviously still got that whole, they're still being grouped in, and obviously they're just concepts, a lot of them. So, I mean, Fisker, I still believe in long-term for the simple reason is that they've got the deal with Magna. They are going to be producing cars. You're going to see Fiskers on the road. The question is, it's just, baby thrown out with the bathwater. I mean, you never want you got to stay diversified for one thing. For two, it's making new lows. So really I have no business being in this at all now. From that perspective. So rallies probably to be sold, talking completely against my buck, but I want to have some exposure. I mean, Fisker in my long-term portfolio, I'll give you how diversified I am. Fisker in my long-term portfolio is approximately 0.3% of my overall wealth. It's literally a fraction of, I'm not talking 3%, I'm talking 0.3%. It's very small. So in the big scheme of things, my overall net picture, it's not. Alternatively, Apple, I believe, is 5% of my overall. So in other words, I have, you're talking 10 times bigger position when you're looking at them from that perspective. Maybe it's not Apple, but, Amazon, there's a bunch of them. Okay. Those are 2s and 3s. Microsoft, Qs are like 7. You're talking. So when you're buying specs, make them a small portion of your portfolio. If you load it up and 30% of my money's in Fisker, you're doing it wrong because that's too much risk, man.
I mean, going to space, I mean, people aren't kicking out 350 GER to go to space. I mean, in a capsule.
I worked for a long time. I had a double on this. I was in this thing from 15. I sold at 25 because I thought it went too high. And then it came back in. I rebought at like 27. I got out some at 52. These were great trades. These were great because the story was so hot. When we were in the end of 2020, valuation didn't matter. It matters now. We've been talking about on the show for 2 months. Valuation matters. If you're buying something 50 times sales, this is not the market to environment to buy something 50 times sales. I mean, look at Coinbase. If we take it to that,
Oh.
I mean, and this is Bitcoin, but you got insiders dumping left and right on the direct listing because there's no.
Was it that big of a sell? Was it? Because
no, there was some. So in the original tweet that I had retweeted, they weren't selling all their holdings, but they were big sales. There was insider CEO dumped some, CFO dumped some. They all dumped some stock.
Let's think about this logically for a second. Somebody has to sell, right? If you're doing a direct listing, you're not.
So they were selling just because they had to.
You're not issuing new shares. They got to come from somewhere, right?
Somebody had to sell.
Somebody had to sell.
Sure. So we'll look at it from that perspective. And Kathy, we know, has been buying. I don't know if she bought more on Friday. I didn't look. I'm assuming she did.
Yeah, I'm pretty sure she did.
Probably.
I already forgot, but we can look.
So it's down because of Bitcoin.
Yeah.
It's valuation again. I mean, this thing, like we were saying, is valued more than ICE, Joel. Like way more than the Intercontinental Exchange, which has businesses, and exchanges, owns the NYSE, owns all kinds of different exchanges. Been in this business for decades, if not longer.
Not just ICE. ICE plus NASDAQ.
So you got to look at it and you say, okay, are we all just going to stop trading stocks and we're all going to start trading crypto? Maybe that's the case. Maybe this is just going to get silly town. Crypto, doggy coin, it's gotten silly. But again, SPAC's gotten to silly town. Look how that's went. I believe that the crypto space is where SPACs were back in December, January. And I would not be the least bit surprised if you start to see stuff roll over. I'm sticking with my Bitcoin for the simple reason I still own the Ethereum because it has a use with the NFTs. But right now, after the carnage over the weekend, I think the short-term top's in. So I'd be a seller rallies and all this stuff.
What do you think about the way I looked at this coin chart for the first thing last night, and wow, I mean, the volatility, it already came in on this thing. I mean, it hit 430 the first day. So if you're going with the Eric Kroll, break the top of the IPO range, you can get your buy stop in at 430.01. That seems a long ways away. And then on its third day of trading, it had an inside day. I mean, to me, I mean, people are maybe getting long, people are getting short, but to me, it's just like, wow. Like there's a roof on this thing already, and I just don't see it blasting back up to 430. I don't know how low.
It depends. If it's going to be linked to Bitcoin. If Bitcoin can turn around and blast off to 100,000, coin's going to go higher. So it's a Bitcoin. It's another derivative play now off of Bitcoin price.
One thing
Bitcoin
you
gets
said,
hammered, coin's going to be down.
You said one thing last week that really resonated with me, and
you listened to the show last week?
Or no, the week before I left.
You're on vacation. You didn't listen to us.
Yeah, believe me.
All right. You gets enough listening to me. You didn't listen to me on vacation.
No, you said about the spreads are going to come in on that. Their margins are going to come in. Spreads, there's competition. Yeah.
They're not going to get these juicy 0.5% spreads forever.
No way.
If crypto continues to grow, you're going to see competition coming in. I mean, the other exchanges will come for it too. So as soon as an ETF also gets we get approved in the US, it's going to open the doors as well. So competition coming for them. So juicy margins, you can look and you can just project out on their current numbers and say, wow, if the customer base grows like this and they got these margins, this is where it's going to be. The margins are going to get squeezed tremendously. They're going to get squeezed down from 0.5% spreads to fractions of a percent, and that's what's going to happen as it gets more efficient. And that's good for crypto traders, because right now you're paying 0.5%. That's like horrible. So in some cases, maybe it's tighter in some cases as well, but it's significant. The spreads, they're going to come in, and that's going to squeeze Coinbase's margins. So paying and projecting out on these numbers and these margins is a futile exercise, because the margins are going to come way in. So you got to consider that as well. I wouldn't buy it. Just my opinion. I mean, and its story could get hot. Bitcoin could go.
Yeah, I mean, whoever was
path. But all I know is nobody knows anything, but all I think is that the margins get squeezed. Eventually those numbers aren't going to look as good as everybody thinks they're going to look.
I agree. All right. So the crypto show, I don't know if we need to talk about what Kathy was doing last week, or I guess the next big news story is Tesla.
ARK, if we just look at the chart of ARK, let's just look here. ARKK, holding up fairly well. It's Tesla holding it up. Tesla has actually held up pretty good. I mean, you have a lot of other smaller names. You talk about the open door technologies. That thing breaks down every day. She has a few names that are going up too, though. So, but again, just this paying any price for growth is just a recipe in the long term to not make money, in my opinion. And she's really done well here. I just think you got to be more selective in your, in what you're paying. We're not in the environment where they're rewarding risk at any cost, and just, paying up. And if I look at this ARC chart, or ARKK, it kind of looks like it struggled up here at 130, Joel.
Oh,
You're the technical analyst.
Yeah.
You got a textbook 50% retracement. If you take it from the 150 breakdown to 110, struggling at 130, went back up there, tried at 130 again. Can we do it? No, we can't. We're leaking here. And stocks she's owning are the stocks that are not liked by this market now. So I actually think ARKK looks like a good short to me. Just my opinion from the technicals. I don't know what your thoughts are, but it sets up more. You do have the double bottom place at 110, and it's going to be dictated by Tesla because she owns so much Tesla. Obviously, that's the big thing. If you put Tesla's chart over her chart, you can see there's definitely a huge correlation. So on ARKK, but you gotta be careful just paying any price for growth right now. Be reasonable. Growth at a reasonable price.
Look at this. Moving over to the RKK here. The 130 sticks out like a sore thumb, right?
Big level.
Boom. You had the bounce. Woo, out. And then you break down again. Buyers stepped up there at 110, right? A lot of lows at that area. And then 130 again. But I think what your next level that you got to keep an eye on here, if you're still bullish this thing, is look at the consolidation you had at right 122. I can't see the exact numbers here, but you guys can look at them on your own chart. You had multiple lows in the same area just above 120. So I'm not going to mess this up with any lines or anything, but you can see all those lows, and you take that out, then you're going to go back and test your 110. So it's holding in there. I still see that support. We're actually opening the support here. So I think today's a big day, 120 for ARKK.
There's a lot we can get to here. Do you want to talk? We can talk Peloton. We can talk GameStop. We can talk Man U is making a really big move for that stock this morning. That stock doesn't move. And
Manchester United, what's up?
No, Manchester United, Man U. This thing doesn't move. It's within. If you discount, COVID, basically within a range of like $5 or $10 for the last like several years.
Reopening trade here? What's up?
No. This is split in the leagues.
Yeah, this is on. There's a Super League, a new Super League that they're basically going to make to compete with, or maybe displace the Champions League. And Man U is one of the founding members of that league. So and they're traded at MANU, and this thing the stock does not move really, but it's up for this. For a stock like this is a big move for Man U this morning.
It's got a nice little 1% dividend, something. It's a value. It's a little bit of a value play. I've traded every once in a while. It's been a while since I've traded it. Trading up 8% on it. I don't know. We'll leave it up to. They're telling me I'm not the technical analyst in the chat, Joel, so I better let you do technical to you. I'm not allowed to talk technicals on the show.
Would you want to own a sports franchise right now? No. Over the next couple years?
Really, always. Of course I would.
You would?
I wouldn't.
Of course.
How are they making money right now?
Valuations do not go down. They
not
go really?
How are they making money right now, though? Like all these, especially, let's go to the NHL, because you have obviously Yankees and stuff, the TV. But, what about like the Arizona Coyotes? Like, how are they? They were teetering before COVID started. How are they not bankrupt? I don't understand. Is nobody buying TV rights for the Arizona Coyotes?
All right. So the Coyotes might be the one exception to the rule, but for everybody else,
I don't understand how the team's still there through this COVID.
Well, the Coyotes got nationalized, right? Because the NHL took them over, so they got nationalized. But no, it's Joel's right. It's TV. It's TV revenue. It's not,
but that works for Toronto Maple Leafs. That works for New York Yankees, Rangers, Chicago. The Cubs. I mean, where there's huge followings. But what are these small market teams? That don't have the huge, viewership outside their local regions. How does that work?
They get a cut of the league revenue. Is what
it's all the league revenue sharing. Is that in all? Is that in the? I don't know. That's in the NHL. I know that's in the NHL. Is that also?
Yes. But you're both right here. Like Dennis's point is that there's no way all these teams are cash flow positive, but that doesn't really matter, right?
They got revenue sharing.
There's only 30. There's a supply of 30, right? That's your supply, 30, and then it doesn't get bigger very often.
I don't want to own any sports teams.
I would gladly own a sports team at any point.
I'd get too ticked off too, I think.
Well, I'd be freaking out. What are you going to do with those the stadiums are. I mean, we're going back. We're going to be going back to games and stuff, right?
Yeah.
But are they going to put 100,000 people in Michigan Stadium? Is it this year? I mean, I'm renewing my tickets, and we'll see what the situation is. But like, who's deciding like the protocol for the games and the stadiums? And then I think about the restaurants and Ann Arbor and all the restaurants and all the the parking and the concessions and I mean, you're talking
so much
about
lost revenue.
billions and trillions.
Feels like trillions. It feels like trillions.
Yeah. And I mean, I have not. I mean, Red Wings. I mean, I didn't watch them. I mean, Pistons. I don't even think I could tell you 3 players on the Pistons.
All right,
I watch them when they're winning. I'm a bandwagon Piston fan, but they've been bad for so long. I can't tell you 3 players on there either. I flip them on just to flip it on every once in a while, but it's it's tough. Even the Tigers. I mean, I was a huge Tigers fan. I've kind of it's been challenging. It's been a challenging sports market in Detroit for a long time.
I think you're losing the plot here a little bit because the point is
we wanted to complain about our teams though.
I know, but the point is that they made it through. Maybe this is a good segue into this is a good segue into Disney because they're on the front page of Barron's.
Yeah, let's talk a House of Mouse.
Barron's is saying the same thing that we've been saying, which is like they made it through. That's all that matters is they made it through. And Disney's been ripping here. And it's only going to get better once they reopen, in theory.
What do you think about, you just went on the vacation. Is the reopening trade imminent here, Joel? You were somewhat worried because the flight wasn't full, but maybe you were going past March break and off season to a certain extent, although not very off season. Still,
you don't want to hear my American Airlines rant.
Oh, what is it? We do though. We love rants. What happened on AAL?
Well, first of all, I flew Delta, and they were incredible. Okay, but I'm sure people don't want to hear too much about this. But Lisa booked some plans. My niece is getting married in July in Philly, and she's gonna fly. We have credits from another trip, and she called. She was on the phone for 2.5 hours before we left on vacation. And they said, we're sending you an email, a confirmation. You should get it, 5 days, a couple days or whatever. So she looks yesterday and she looked before we left and all our flights were there, all credited and everything. They were all gone, completely gone. And so then she called them up. So waited 3 hours. They called and they told her that they canceled it because they changed the time of the flights. And then now all the flights to Philly from Detroit were $1,500 a piece. And she was like, you're out of your mind. She's like, there's something wrong with your computers. Is your site down? And she was screaming at them and going back and forth and worked out a deal. We got some credits. And she's like, if I see these flights lower in the next couple days or next week, I'm calling you. She woke up this morning. She looked on their site and they had flights to Philly for $200.
And they were burning you for the 1,400?
Yeah.
Holy. Price gouging, 101.
I mean, there's something going on. I don't know what the organization of that, but I think the reopening trade's on. I don't know.
The market still thinks it's on.
Yeah, the market still thinks it's on. Half of the people are vaccinated. Everyone is
except in Canada.
Right, except in Canada. And everyone wants to get back to it. So I think you're going to see, as long as, Michigan obviously is not doing that great, or Canada, but as long as, you see a continuation, yeah, I think that trade. But I don't ever see, I don't want to use ever, that's a long time, getting back to the levels that they were. These places. I mean, I wore a mask a lot in Florida. I mean, what kind of fun is that? I mean, I think, that if anything, the virus has just kind of been like a fun sucker, and it's just.
You think?
Yeah.
Just a little bit of fun sucked out.
I mean, no, for sports, I mean, it's going to get back and everything is going to be different, but I just don't know if it can get, I mean, Disney's diversified. So that's another thing. I don't like the reaction to the Barron's article. And if this thing can't get over 190 soon, 191, this doesn't looking good. This is not looking good at all. So I think they're late to the party on this one. I'd fade Barron's on this one.
I will
I don't
say
know.
Disney Plus though, they got the stars on there now. Did you guys subscribe to Disney Plus?
Yeah,
Me? No.
I don't pay for it, but
we watch the Disney Plus more than Netflix.
Yeah.
I complained all last year that they didn't have enough content.
You
Now they
did.
got the stars all on there, all those movies. They must have added 1,000 movies.
Yeah.
Like solid movies. It was all like kids stuff for the most part before. Now they got cool movies, like fun movies. They had the whole stars group. So there's just a ton of movies. R-rated stuff now, like good stuff, like adult, like good movies. So not just all kids movies. So I'm sitting there and I'm like, oh, there's some fun comedies on here now. I was watching what's the one? Oh man, I'm getting old and I can't think of names anymore. Joel, I'm taking a piece. I can't think of the cop movie, Super Troopers. I was watching Super Troopers on Disney Plus. It's a great movie. So I mean, they got good movies on there now.
Can I tell you what I watched over the weekend? I watched a Disney Plus movie that I had never seen the whole thing of. I watched The Sound of Music.
I've never watched that.
The movie's really good.
Is it good? I should watch that. Put it on the bucket list.
Okay, wait. It's 8:30 here. We're gonna have Tim Quast on.
Well, one more thing. If we're doing this whole TV thing, oh my gosh, I love cable. We went to this place. We went to this place. The first place we went to, I couldn't get on the TV. I couldn't get the Masters. I had to have Lisa sign up for Paramount Plus to get the Masters. This place, it was a nice, Airbnb, but no TV. That they got it like Roku, and then I'm like, I'm trying to, Lisa, what you Roku?
They cut the cord on you at that
Airbnb. They're saving all kinds of money, and I'm like, give me the
cord.
damn Masters. I don't have to pay for it. I want CBS, NBC, and ABC. Go back to that. I mean, holy
Joel's
mackerel.
not cutting the cord in his house.
Oh my Lord!
Cutting at the Elconin family.
It was ridiculous. And then she had to sign up and do that, and I just wanted to watch the Masters, and it wasn't even that excited anyway. So I mean, but that's
Joel says go long Comcast.
I don't know. I guess for us old people, it's easier. But let's do the Tesla news before we bring on Tim. Yeah.
Yeah. So I saw this over the weekend. There was this tragic accident where a couple people died. But it doesn't appear like anybody was was even in the driver's seat. So
how's that work?
So unclear to me. I guess it's still too early to tell exactly what happened. They're obviously still investigating the crash, but if no one's in the Tesla has autopilot, but you got to be in the driver's seat.
Yeah, I remember Jason, you got to touch the wheel every so often.
You got to engage it. So I don't know. I don't know.
So this might have been user error.
That definitely goes again. They didn't read the manual because
it's down $17. So they are hitting it pretty hard on this. Again, even the same thing. We can tie Peloton with this. Maybe we should do them both at the same time because there was because these are both gonna be the same type of trade. Exactly. What's the Peloton news too?
The Consumer Product Safety Commission basically told people that if you have a small child or pet, you should immediately stop using the Tread Plus treadmill. Peloton, for their part, it was like, what? No, they haven't issued a recall. They haven't. They basically responded. They're like, this is, you guys are way overreacting. Someone did die. There was a couple other people injured. I guess they got caught under the machine. But again, to me, this feels more like it's nothing unique to Peloton, and more like this is like an exercise equipment.
Let's be dead honest. If you go underneath the treadmill, you got that thing jacked up at like 30%, and your dog or your kid crawls underneath your treadmill and it goes back down, you're gonna get hurt.
Yeah.
So I mean, I completely agree with you. This is more of like an exercise equipment thing. There's definitely been people injured on treadmills. Treadmills are still in existence. They're still everywhere. I had one in my home until I sold it, which we sold everything because we're moving.
You actually sold that thing?
You could sell. You could have made money during COVID. You can make money on those things, Joel. People looking for treadmills, man. Exercise equipment's hot during COVID period. So, but down $7 on this headline. Tesla down 17 points on the headline. If I wanted to own these stocks, I would use this as a buying opportunity. I don't want to own either of these stocks as a valuation. but that has nothing to do with the headline. I think the headline is a buy the dip opportunity, but again, because I'm scared of valuation on both of these stocks, I'm not buying the dip. But if you're so inclined that you've been looking for a dip on Tesla and Peloton to get in, it could be a buy the dip opportunity in that case. Again, I don't want these stocks because these stocks are just out of favor right now. So it makes it tougher to buy the dip. But Peloton, Tesla, I don't think this is, to fly out that there's going to be, there's going to be way more deaths now with Tesla and Peloton because of this. I mean, people get in car accidents every day. Obviously making mistakes, and if they're not behind the wheel, it sounds like a mistake. And then Peloton, people have been injured on treadmills for years. They're still
That's the fundamental look. 720. I talked about that level before I left. As a big level, they took it out. Did someone upgrade this last week or something? What did it? It got
probably
juice
Kathy
or something, because it got juice when it got near. I don't know what it was, but it had a couple big updates. So now, are we going to hold 720? Right?
It's still holding up. Yeah.
That's
big level.
Right. Yep, that's very important. Little gap to fill down to 700 and change. I don't know what caused this gap, but maybe if you want to try and low take it, go out 705, 704.80 fills the gap. So there's an area that's I think it'll hold here. I mean, I think as far as I'm no lawyer or anything, but if no one was driving it, I don't know how that's Tesla's fault. Peloton, I own it. I hate it. I want out. That's all I can say. But I'm not selling it. So there we go. I'll sell it at 70 instead of selling it at 109.
Joel's still trying to put his business proposal together to get rid of his Peloton shares. Lisa's not listening.
Nope.
And Lisa's been right the whole time. So
and all I know is I don't have the treadmill. I have the bike. So and whenever the dog comes in, I'm like, Perry, get away. And then she goes away. So
you close the door when you got the exercise going. Don't let the dog in.
Okay, thanks.
You let the dogs in. Okay.
All right. It's 8:36 on a Monday, which means it's time for Market Structure Mondays. Tim Quast is the founder and CEO of Market Structure Ed's. What is that hand thing? Tim, good morning.
Good morning.
It's a good
morning,
tune.
guys. I'm doing the V for vaccinated. I hope that.
Did you do the J&J?
I hope the spot that Spock didn't copyright that. So Dennis, we walked into the pharmacy for shot number 2, and I walked up to the pharmacy and I said, "We're here for the J&J shot," and it did get a little burst of laughter. We did the Pfizer version.
The Pfizer's been the best one. I want the Pfizer shot too, but I don't even have any choices in Canada, so I'll take the J&J, man. Send me your J&J shot. I'll take it right now.
Come down to one of my houses, and we'll hook you up.
I know. I should come down. Bring your J&J shots to Ontario. We don't have any shots. We'll take AstraZeneca. We'll take the J&J. We'll take the Pfizer. We'll take your homemade vaccine. We need anything in Ontario, man. We just want to get out of lockdown.
Right. Well, come on down. Come on down to Steamboat.
I should. They don't let me in the country, though, because I'm from Ontario.
Yeah.
You got COVID, man. We just stay away.
Right.
Tim, how's it going?
Well, thank you. I heard I heard part of your discussion about Peloton and Tesla, and Joel, I've got a Peloton as well, and it is a great machine, isn't it? They're just fabulous machines. So the question, though, I suppose, is whether that's material. From a trading perspective, and I watched some of the folks. See, you've got a big crowd, and I watched some of the comments before I came on, and it might be interesting to look at Peloton. There are some things that I think we should talk about. Maybe I'll preface it this way: there's the big picture, and then there are these specific cases. It's probably good to review. If we look back to it's not me. We have good data. I think that Market Structure Edge has good data. We go back to January 25th when I was on with you right before I left for the Caribbean. As we said, well, the data show that the market's probably going to decline, and it'll do that for about 10 days. And then we came back in February and said, well, now the market will probably recover until the February expirations and the month-end window dressing jam into each other, and then we're probably going to have 10 days of trouble. And sure enough, we did, right? Then we went into March expirations, and there were very strange occurrences that happened there. And we can look at some of that if we want to, but the point is that's where the Archegos Capital blow up occurred. And following that, we said, well, I think tech probably is the place to be, because if tech, which will bring us back to Peloton in a moment, is 50% of market cap. So the FANGs Plus, I include in that group AMD, Tesla, of course, Microsoft, NVIDIA. I throw in Shopify because of its characteristics. So if you add those together, it's 22% of market cap, just in the FANGs and the Plus group. Then you add tech that is in consumer discretionary, which includes Facebook and Netflix. I saw some folks were talking about Netflix, and then communication services, and then tech itself. It's 50% of market cap. So if you have a market where assets are allocated, even if Kathy chooses a basket, she will not be able, obviously, that's her focus to begin with, but she's going to come back to the names that matter because they're most of the market. And that's true for just about anybody. And sure enough, that group did well. And we said probably they do well right into April options expirations. And Joel, I think that's your answer to Tesla. It wasn't an upgrade. It's because Tesla did well right into Thursday, Friday, index futures expirations on Thursday that the Europeans prefer. It's our only AM dated instrument in the American markets. And then Friday was triple witching. Stock and index options, and then options on futures. That's the triple. And the markets got a nice run into that. Now the broad question is, what happens with new options trading today? And folks like Millennium, 50 billion in under management, huge hedge fund run by Israel Englander. And and traders, when you look at these folks like that, the professionals, the big hedge funds, it's not that they have 50 billion. It's that they will have 450 billion, because they tend to lever 8 or 9 times to 1. And Israel Englander is hiring a bunch of risk management people out of Goldman Sachs. So is Millennium. And what does that mean? Are these folks concerned about the effect on banks? Spencer, you and I traded notes about banks, and why are the banks not doing so well on these incredible results that they've achieved? Goldman Sachs has done fine, but the others have kind of lagged. All of that brings us around to let's start with Peloton. That's the backdrop to me, and it tells me that using probabilities and data are wise, and that if hedge funds are thinking about hedging risk and new options trade today, what should we as traders take away from that? And are there some data and probabilities that we can use? So I've rambled on, but traders, I'll share this.
Let's jump into Peloton.
Yeah, let's look at Peloton. So I'll share my desktop, and traders, you can do this. Just go over to marketstructureedge.com, and you can sign up for free and just follow along. And I'll show you how simple it is to look at the market structure data. By the way, for fun, I was reading the 898-page new rule on the data plans over the weekend. That's what I,
That was a nice weekend. I just started reading 900 pages on the new rule on data.
It's riveting. That's there's Stephen King, and then there's the data plan discussion from the SEC. Of course, all the exchanges have sued the SEC to block these changes. But anyway, here it is. So the app is actually app.marketstructureedge.com, but just go to marketstructureedge.com and this is what we look at. So let's go look at Peloton from a market structure lens. And what that means is the rules that govern how the market works and the behaviors that arise from that. So if we look at Peloton, it's 10 out of 10 overbought, topped, 60% short, and machines are the leading behavior. That was as of Friday. So no surprise that it would be down. I mean, it's at the very top. You don't want to buy top sentiment. You don't want to buy tens. You want to buy sentiment that's rising. So traders, if you want to know when to come back to Peloton, the data will tell you. The time to buy Peloton was right here when sentiment began rising. So that was right at the end of that particular day was March 25th. So right at the end of March, this is where money started to re-weight back into tech. And notice that sentiment, this is the line. The thing I love about sentiment is it's not volatile. Prices are very volatile. It's very difficult to trade a price because it changes all the time. So sentiment just rose and rose and rose and rose until it hit 10. Short volume right here it's very high. It's frighteningly high. It did tick down. It was actually a little squeeze on right into options expirations, probably telling us that there were puts and people got squeezed on those puts. And the offsetting hedge would be short volume. So that hedge comes off. So even here, if you held it, you would hold it. If you don't own it, don't buy it here. This is not the time to buy it. You want to buy it when this line has gone all the way back down and begins to recover again, telling you that everybody who's going to wash out is out and demand begins to come back, then surf that wave. That's how you do it.
Tim, can I hop in here real quick for a second? Does it come down and then go up a little bit and then come right down again?
Rarely. It usually runs in cycles, right? If there is weak demand, it does not rise back above 5. 5 is the axis. I always think of the market as being, the 10-point scale. And if things are above 5, there is more demand than supply. Since the financial crisis, by the way, all the way back to the recovery, March of 2009 to present, the market has averaged, even through the pandemic correction, about 5.5. The whole market. So it tells you the whole market is a GARP, growth at a reasonable price market. When, and it will happen, it stops averaging 5, that's when we will really have a sustained bear market. And we're nowhere close to that. But notice that Peloton here in February never got back above 5. It just never, you could still trade it there, but you would want to leave. If it stays at 5, get out, because it's not going to do better than the market. And so you want to own stuff that will do better than the market. And it really did very poorly. This was a tough time. This is the Archegos effect. Everything wigged out around that Archegos effect. But notice how it tends to rise and fall predictively. And that's what you want to use.
Let's go to Tesla too, because it's in the news here. Obviously, it's down significantly here this morning, but it was starting to show life. It's been holding on so much better than some of the other high valuation names. Tesla's actually, maybe it's because it's such a major S&P component that just kind of moves around. The S&P, the index effects probably have significant more effect than maybe the whole high valuation with sound high value stuff. So anyways, down 19, obviously, accident, tragic over the weekend. Right. What is the market structure looking like on Tesla? So,
by the way, with roughly, let's call it 750 billion in market cap, Tesla by itself, if total market cap is 50 trillion in the U.S. market, it's a mind-boggling number, 50 trillion. Tell
us about that. How are you calculating that?
So you take roughly the Russell 3000. You take the Russell 3000, which is 99.9% of market cap, and you add it together. And you add that up, and we're at just barely shy of 50 trillion in market cap. But Tesla is a meaningful part of that by itself. Yeah. At 1 trillion, it would be roughly 2% of the market. So it's just a shade under 2% of the market. It's huge. Yeah. And so look at it too. 10 out of 10, topped, 41% short. It's more long than short. That's a pretty good sign. Active money is the lead behavior. So really, investors continue to believe, thinking people continue to believe in Tesla.
So this could be a buy the dip opportunity?
Well, again, the rule still applies. If it's 10 out of 10 and short volume covers, if you own it, don't leave. You don't have to leave. This tells us that this effect is likely to be short-lived. Now, if it changes, if short volume rises above trend, like we saw in here, this is where you would wait. So you wait for, sentiment returns to the trend, and short volume, returns to trend. Short volume, by the way, traders, is the amount of stock comprising daily trading volume that is borrowed. And it's almost half. So when it reverted to trend here and sentiment ticked up, well, that's a great time to buy it. And then you stay until sentiment ticks down or reverts to 5. So in here, if you own it, stay. You don't have to sell it unless the data tell us. If you want to buy it, I would wait. I think that once again, you have two important dates here that are occurring. Right now, we're still in We're still in April options expirations. New ones trade today. Tomorrow, banks will true up their books on both the ones that expired Friday and these new ones trading today. Wednesday is VIX expirations. And there are trillions of dollars tied to volatility strategies to avoid it or to ride it. And so you get past that and we can see some big changes in the way that people are trading. So wait again for sentiment to fall and rise. You will get another better entry point, and it may come after this. And how long would it take? Well, data tell us that it takes, if you look at the cycle here, it's about 8 or 10 days. 8 or 10 days, and you'll have an opportunity, I think, in Tesla.
T. Cole says he never misses Mondays with Tim Quast.
Thank you.
He is the founder and CEO of Market Structure Edge. Joins us every Monday for Market Structure Mondays. Tim, always a pleasure. Nice view behind you. You're in a different spot. We like it. We'll talk to you next week.
All right, guys. Have a great week. We'll see you.
All right.
Thanks, Tim.
I did. Oh yeah. Here's what I wanted to do. Before I forgot, I wanted to announce the winners of our swag giveaway from last week. So we had a contest where I mentioned we're doing this rotating contest every week. We're doing a new show. Last week, we did a contest through Pre-Market Prep, giving away up to $100 of Benzinga swag. We have 4 winners, 1 person who has won $100, and 3 people who have won $25 in Benzinga swag. Those winners are Douglas Smith is our big winner for $100 in Benzinga swag. I'm going to email you also so you know that you won. Alexander Chernov, Stephen Rotring, and Grant Barnes all won $20 of Benzinga swag. So congratulations to the 4 of you. Oh, no. Oh, there we go. Okay. My sound effect didn't really work. But
that worked pretty good.
Here we go. I don't know. Applause. Here. I'm going to email Douglas, Alexander, Stephen, and Grant. Congratulations. You guys won our contest. Next contest is going to happen on our next show, Get Technical, starting at 9:30. Can we talk about semis? No. Actually, before we do that, I want to talk Apple because do not forget, Dennis, you like trading into events.
Yes.
We have an event tomorrow.
What time?
It's the Apple Spring event. It is at 1 o'clock Eastern time, 10 o'clock.
Writing it down.
Pacific. And they're probably going to announce some new stuff, right? That's what they do at these events.
Yeah.
Announce new stuff. So watching Apple today because of that.
Again, if you're trading the events, I want to reiterate it one more time here. The object is not to hold it through the event. The object is to hold it ahead of the event and sell ahead of the event, because I took a lot of heat last week when you were away, Joel, because I said I went long Mara, Riot, and all of them ahead of the Coinbase direct listing. Yes. And I sold them all that morning of, I think I made like 5 or 6% on a couple of these stocks overnight. It was a really good trade. And then I'm taking all this heat in the afternoon because they tanked. And I'm like, I clearly said that I was selling before the event. I don't hold it into the event because the event's always a risk. So the idea is to get out before the event. We don't know what Apple's going to say. Maybe they're going to say some really cool stuff that's going to continue to rally, but all I know is there is alpha generated from being long ahead of events. Doesn't work 100% of the time, but if it works 52% of the time, it's a moneymaker.
Dennis, they're not listening. They're not listening. They
do listen.
No, some people just, you know why they don't listen? You know why people don't listen? Because they're machines. I don't listen either. Because they're machines.
Oh, you think some of the machines?
Yes.
Some of the machines trading off of her.
Exactly.
Off of the stuff.
Some of it. Many. So it's just machines just trying to. I mean, you pop. What is standing out? You pull up this Apple chart. You guys got to see it. Yeah. What is sticking out like a sore thumb? I mean, come on. Let me share my chart here. Holy moly! What do you got to keep an eye on for the rest of the week and maybe for the rest of your life here in Apple? I mean, we had a run. Let me show it. What sticks out like a sore thumb? Anybody that doesn't get this, just get kicked off.
135, man.
Oh my God! Oh my Lord!
How many daily highs is that on one?
It's been a nice run already. It's at this point.
It's like 137 or 136 something. Something.
2 right on the kisser. 1 at 466. That was on Tuesday. So you should have been alerted to 466 on Tuesday, 35 even. You should have been knocking your head saying, "Oh, wow, just got a little above it." Then on Thursday, 135 even again. And then Friday, the seller stepped down. He said, "I'm not going to get my 135s off. My target exit is between 134.50 and 135. I better bring my offer down." And that's exactly what they did. Also, that strict technician there, they were just playing this for a gap fill up to 132.79. They didn't care about anything else. And then 135. So I don't know what's going to happen with the event. I did hear Amazon is coming out with some new pods or something, ear pods that are supposed to kick Apple's butt. Or was that just some fake Twitter information that I saw? But I did hear that. Come on, guys. I'm not making that up. Someone heard that too, right?
Yeah,
I agree with the point you're making. Is we've had a pretty good run in Apple.
Hell of a run.
Hell of a run. This is a big stock. It's up 10% in a week and a half. It almost scares me to go long just for another overnight trade ahead of it because it's already had its move. I mean, we needed to to trade this a week and a half ago. I'm long Apple in the long-term account. It's not leaving. Don't worry, I'm not selling my long-term Apple. But as a trade here, it's had a pretty good run. So a lot of the easy money has been made. It's going to be tougher sledding here unless they come out with the flying car and from this spring event. I think it's probably, and we know they're going to come out with an Apple car. We know that's coming. So maybe we get a little clarity. I don't know. Is there a projection of what they're going to talk about this spring event, Mr. Israel?
Yeah, I saw here. Let me pull up.
If it's more watch stuff.
Let me pull up here.
Polo Monkey just helped me out here. April earnings on the 28th. So maybe
that's something to think about too.
Yeah, you get a little dip here. Maybe come back down to 131, 132, and then maybe trade it for that. But man, that 135, big level. Doesn't look like we're going to go through it today. I mean, it's only down 42 cents here, but that's a big level. Maybe the fourth time up, or actually it'll be the fifth time up to that area. Maybe we'll go through it, but big area. Got back over half of the move. Had a few calls that I dumped before I left on that thing, but well.
Are you long Apple, Joel?
Yeah, small position.
In the long-term account?
Yeah.
What about you, Spencer? You have Apple in your long-term account?
Of course, I even
Of course. We all got these big caps in our long-term. We all just move around with the mega caps.
Yeah, and to answer your
everything else is just noise. It's really Apple, Amazon, Microsoft, Facebook that drive my entire portfolio. Everything else is not Facebook. But everything else is just kind of noise. I look overall, it's like, man, I'm getting killed in that, but my portfolio is up because I've got some Apple. So
the expectation is there going to be some new iPad launches tomorrow. I'm sure there'll be more besides iPad. iPad doesn't move the needle, but we don't really know what it'll be yet. They only announced it last week, like last Monday. So, tomorrow 1 Eastern time. There's your event. There's your Apple run up. You want to talk? We need to talk about earnings this morning. We had Hog. Let's talk about Hog here for a second.
Oh yeah,
because Hog. This is interesting. Some good news and some bad news. The good news.
Driverless motorcycles?
No. The good news is that their earnings are good and their guidance was better. They actually raised their motorcycle revenue growth expectations from 20 to 25% growth to 30 to 35% growth. However, they said that a new EU ruling would subjugate the company to a 56% import tariff within the EU. I don't know how much of their market is in Europe, but that's not good.
I know the market don't seem to care about that. They're just looking at the revenue here and the projections higher, and it's up 8%. You know what? I'm kind of kicking myself here. This kind of seems like one of those outdoorsy, getting into the spring seasonality plays, and everybody's been buying boats and they've been buying campers. Why not buy motorcycles too? It fits right in with all that. So wish I was long. I'm not. I don't know. It's breaking out here too. So very important day for it. Kind of hold the gains.
Exactly. Opening up into a big area. You have your pre-market high 44.62. That's a little bit of. I'm just looking at these four tops right here in this area. 43.75. Currently, it's trading right in that area. So it holds 43.75. Take out the pre-market high. Go to 45 and beyond. But man, it got up there once. Caught a cold. Twice. Got really sick. And, had to gap up. I can't remember what that was about. It got up there again. So a lot of resistance up there. You're opening right into it.
Hog will be there at the four tops. Let's just talk semis for a second. Someone asked about AMAT, and I want to do a thing on Intel versus AMD. I don't know if you guys have thoughts on any of those three.
Wow, this semi run has just been incredible. Applied Materials, we're talking about this time last year, and the stock was $40 stock, and it's $133 stock. I mean, these things have run so far. AMD, we know, has been in consolidation station for the better part of a year, really, between 70 and 95. Is this consolidation go higher? The line in the sand we've given on AMD, it still applies. Is I think you want to stay as long as it holds a 73, 74 area in the longer term. But if it ever takes that out, it could be tough at roads. But I think, your consolidation to eventually go higher there. I kind of like the AMD and Intel. I'll give you your thoughts in a second, Joel. Intel, I know you own Intel, Joel. I wish I still owned Intel. I think it's still cheap. From a valuation perspective, I think that they've got, the Mobileye. We've talked about that. I like Intel too. I wish I still owned it.
I just give you clear numbers here. I think the AMD, it's just been too quiet too long and just getting up. The rallies seem to be sold. So until this clears for good, clears 84, I think path of least resistance is lower. Great support in 78. It's just, each bounce, it's just been a little bit more muted. AMAT, haven't looked at in a while, trading down 220. Just looks like it got tired. Like 4 days of consolidation, breaking down through the lower end. I'll use 111.50 as resistance. And Intel got knocked last week, coming back, good support. I like the support at 64, turning back up here. Well, hopefully to test at 68.
All right, Dennis or Joel, any final thoughts before I bring on Matt Hammond to talk IPOs this week?
Just look at imbalances. We should start looking at imbalances every day because they are meaningful, especially after an option expiration. AT&T, 226,000 to buy. Wells Fargo, 165,000 to sell. General Electric, very mixed, 210,000 to sell. And GE, Taiwan Semiconductor, 63,000 to buy. Disney, House of Mouse, 51,000 to buy. That's significant as well. I'm just cherry picking out of the big mega caps. What I'm seeing. Bank of America, 82,000 sell. Very mixed market. Very mixed today. There is definitely some life, though. I know we're seeing a lot of red on the board, but there's a lot of green here too. You're seeing green in the financials a little bit. You're seeing green in some of the oil. You're also seeing green in some gold stocks, and Coke's helping some of those consumer staples as well.
Oh yeah, we didn't even do Coke earnings. No big deal.
They beat and they beat. That's the bottom line on Coke. There you go. Not much to say about it. Stock is up $1 this morning.
It's a big move for Coke.
Big move for Coke. All right.
I'm going to say goodbye.
All right.
Me too. Everyone, goodbye.
Wait, Joel, don't leave yet. I want to say people really missed you, man. I got a lot of heat. I got a lot of crap about my charts. They're like, we missed Joel's charts. I was like, I'm sorry. I can't help it. So people missed you. They missed your charts. It's glad to have you back.
Well, that makes me feel all warm. And
we missed you, Joel. We did.
Some people were on Monday. They're like, "I missed Joel," and I was like, "Get over yourself." It's fine.
But Thursday we all missed Joel.
Yeah. Okay. All right. Have a good one.
All right.
Speak to you later, Spencer.
All right. Before I bring on Matt, I want to just preview today's programming slate real fast. So we've got pre-market prep, of course, which is on now. Get technical on at 9:30. Trading with Benzinga Pro at 10:30. SPACs Attack, they're interviewing the CEO and COO of Parts ID at 11. We've got the Power Hour. We've got Wall Street Global Trading Academy with David Green at 2. There's actually some more there. That's weird. At the close show at 3:30. Doing my weekly short report recap with Edwin Dorsey at 4. Cannabis Insider at 4:30. Ryan Rosebiani should be at 5, although I think he may have to move until tomorrow. We've got a couple of shows that aren't on here. We've got a new show we're trying today at 4. I'm sorry, at that's for tomorrow. We've got the Rail Report at 8. We are doing a new show with Mitch. Mitch is doing a new show that he can talk about later on in the evening at 6 o'clock here. Money Mitch. I don't even know what that entails, but we'll find out. Let's bring on Matt Hammond, though, and talk about IPOs. Matt, last week was huge week in IPO land, and this week will not be as exciting, right? But I want to know how you traded last week's stuff.
Yeah, last week was huge. First of all, good morning, Spencer. Thanks for having me again. Yeah, last week we had Coinbase, which was incredibly hyped. Let me get in focus a little bit.
I got to hear how you traded this guy.
Okay, so we'll cover that in just a second,
Cool.
unless you want to just jump in. There are quite a few IPOs this week, so we do want to move through the recap of last week and get to what's coming up. Last week is past. Can't really make money on the trades that already happened, but there's still some opportunities this week. Actually, I think we have 12 IPOs this week. So there were at least 3 win opportunities significant, including Coinbase, which we'll get to in a second. Right before Coinbase debuted, there was a smaller Alchemy Technologies, which we did preview on this show last week, which does software as a service for small banks and credit unions. It did a nice little initial run of about 20%. Coinbase actually, despite its big drop-off, did offer about a 10 to 12% win right off the front, which is an easy trade to make, and we'll go over that in a second. But the biggest opportunity last week was one that we called out on this channel, was esports entertainment, eBet, which gave pretty much followed almost exactly the same game plan as UTME, which was what we were banking on, what we were expecting. And it didn't quite have the second day pop, but it did have tons of outs, still isn't giving any heat on the initial debut price, and was a very easy trade to make a lot of money on. I got a lot of people into this. I hope a lot of people on the show played it. We got a few coming up this week that maybe I'm not as confident in those, but are worth playing for the same reasons, and we'll get those again. But the theme of this last week was, hype. All of this was hype. Coinbase had a ton of hype. eBet had a ton of hype. And it's hot. It burns. It propels things to the moon, but it burns out fast. And we saw that with Coinbase. So let's jump into those. Alchemy, I just wanted to show you that some of these lower hyped ones still give significant win opportunities. Alchemy opened at 41.26 and pretty much did a very steady rise up to a peak of 49.25, retraced a little bit back down to VWAP, and then it rose again. So you had two options here to make a nice win with very little heat. And I love this strategy, especially if you're just getting started with trading IPOs, is you wait for the stock to debut and you simply set your stop loss right at your entry point or just above it. At that point, if you're wrong and the stock drops, you get out for a non-loss or a small win. Maybe the worst case scenario, there's a little slippage and you lose a little bit. But you're basically locking in the opportunity to take advantage of a rise if it goes up. And when it goes up, you just keep, bringing up your stop loss, bringing up your stop loss, bringing up your stop loss. And eventually you're going to get triggered out. And maybe later on it goes on a big run. But you're aiming for wins. If you can get 5 to 10% wins, 7, 10% wins in a row doubles your money. So if you can keep doing that without losing money, you can make a lot of money with this kind of trade. And we're going to look at Coinbase. Coinbase actually gave us that exact same play. If you got into Coinbase at 381, which is where, if you're using that limit price above the indication price, which you can get inside Benzinga Pro, they give you the indication price before the stock starts trading. You can get your order in at 381. It pretty much, there's a little bit of a, I don't know what you call that, a doji but other than that little red blip right there, you had 10 green candles in a row. So if you just kept setting your stop loss, setting your stop loss, setting your stop loss at about 429, it reversed. Maybe you're sitting on a stop loss at 420, which is what I was doing for at least half of my position. Then you got out at 420, and now now you're playing with half your position in place, or maybe you completely got out, and you could get out here. I wanted to long hold it, so I'm still I'm bag holding at this point. But my average price, I can sell at 360 or above and break even. So I kind of coach the strategy or teach people that I think you should take out at least some of your position on the way up. And that gives on this initial spike. And that gives you an opportunity to either completely cash out, or you can, you're holding, but you're not holding with your whole position underwater if it goes down here. Does that mean you following me?
I'm with you.
So that's what I did, and now I'm holding about half my position in the red because Coinbase, I think the hype got a little bit ahead of the direct listing, and with the direct listing, there's other unknown variables, including how many shares are actually going to sell. With an IPO, we know they're going to float X number of shares. With a direct listing, we just know there's this many shares that are, that exist, and we don't really know how many of those existing shareholders are going to sell out of their position. We do know that the longer it trades, the more shares are in play. More people have bought shares, and more people could be selling them who were holding them initially. We just know that supply increases over time, which is probably a good reason why we see the share price dropping. And we saw a similar effect with Palantir when it debuted. It made an initial spike from $10 to about $11.50, $10 to about $11.50, and pretty much trailed off for the rest of the day. And for about a month, we sat below $10, and then everyone, I think, knows what happened after that. It pretty much shot to the moon and has since settled in at around 22, 23, 24. So direct listings are a little bit of a different animal, but on these IPO plays, you set that stop loss, take out part of your position or all of your position on the ride up, and now you're playing with a little bit more grace period here. And if you want a long hold, there's a strategy I'll talk about another time that you can kind of get free shares by, if you had sold, say, you got a 10% win here. If you sold 90% of your position, then 10% of your position you could hold basically with house money. And, in theory, you could use one chunk of capital to build positions in a bunch of companies by using the strategy, just by recycling that initial capital, taking your profit in the form of shares, and you could actually build out a portfolio just with that sort of rollover strategy and take your profit in shares. Okay, the big one last week was eBet in terms of profits. And this one was all about the low float. And that has become sort of a theme ever since UTME a couple weeks ago went from 1140 to 107 over the course of 2 days. And a good way to just kind of check on the hype status of these is to just go to Twitter and see how many people are talking about it. And if everybody's saying, oh, here's the next low float play, it's worth taking a shot at this. Esports Entertainment was only 2.4 million shares. And everybody was saying, oh, it's the next UTME, it's the next UTME. And if you got in on the debut, the IPO price was $6. So, it debuted at 21, which seems like, oh, that's dangerous. It has nothing to do with valuation of the company, very little to do with what the company does, and everything to do with everybody's playing this low float hype. And it went into 3 halts. And using level 2 data, you can see kind of within each halt, what is the demand coming out of it. And as I was able to get in at 21 and exited about 40% of my position at the top of this candle at 35, exited the next 40% at this candle at 35.25. And then I kind of wanted to hold to the second day, but sort of got cold feet around here. And at 25, I said, okay, I don't want to take a loss on anything. I'm really happy with, the win that I'm taking at this point. I'm going to set a stop loss at 25. If it runs up from here, great. If it doesn't, so be it. I'm super happy with, with the win I took. Got stopped out. Still, even that last 20%, I took a win on. And I think I was in for a total of 1,300 shares. I took almost $16,000 profit in half days of trading. So you're going to give up some, long-term play. It's very hard to get 100% of the win capability on any trade. You're going to get it sometimes. The important thing is don't take losses. String together enough wins, roll that money from one trade into the next, and you're going to grow a really nice, piece of pie for yourself, or multiple pies when you get, 100%, 200% wins. There is this phenomenon on the day 2 push. A lot of these will sort of enter the public consciousness throughout the day 1. And then in that after hours session, you'll see things start to climb, and then people start talking about it overnight. This is one of those trades where 71.49 looks like a great peak. Oh, this whole ramp up here would be great to play. But this is where your choice of trading platform is really going to matter, because this all happened between 5 a.m. and about 5:40 a.m. And most of the trading platforms aren't allowing you to trade at that time. Webull, you can start trading this. This is a 4 a.m. Webull opens at 4 a.m. and you can see things like, okay, well, this is probably around 7 a.m. This is when E-Trade and a lot of the other ones come online. Then at around 9 o'clock, you got Robinhooders coming in. They pushed it up a little bit more. And this was these early minutes of day 2. That was the regular trading hours max, for this stock. That's often a really good time to exit if you see this day 2 push and you weren't able to get out in the pre 7 a.m. zone. But this is where, if you're going to play the IPO strategy, having a trading desk that allows you to get out in those early hours can often offer you the maximum profit potential. We saw this with Roblox. You could have gotten out at 92 at like 5:15 a.m. on day 2. But in the normal trading hours, the max it's ever, that it went in those first few days was 78. It's a pretty big difference there. Another one that was just interesting to look at because there is a focus on these low float IPOs was Carrot Packaging. I think it had 3.8 million shares, and it debuted at 1860 and kind of peaked out at 20. It did not make a big run, so it's not a rule. Like, I don't want people to think, oh, it has a low float, I'll definitely make a ton of money. These low float plays can, potentially blow up if enough people get into them. They also can go down pretty fast because if the demand doesn't show up and the volume is low, there's just not going to be enough to push this up. So this one offered a pretty safe play. Again, you get in with a stop loss and, trail it up and you can get out. I played this one for debut at 1860, got out at 1950. Not a huge win, but a few $100s and better than a loss. Put that in the pool, add it to the next thing, roll it into the next trade. String these together without taking losses. You're going to be in for the ones that do blow up, and you're going to get out of the ones before they can hurt you.
Yeah, I just want to clarify something Matt said. When Matt said he said he's not taking the losses, he just means he's using a stop order, right? So that he's like you're using a trailing stop. You said at 20%. Is that what you said?
Actually, I'm using that term a little bit loosely. What I'm doing is I'm setting a hard stop loss, and then I am modifying the order as I see it go up. So It's more like a manually controlled trailing stop loss.
Okay, fine. So you're doing a stop manually, which means that if he's going to lose money, it's going to have to happen right away, right? It's going to happen, right. It's going to have to happen at the outset. And he's not going to let himself lose if he's gets like an inch of gains, right?
Yeah.
That's the strategy.
I will pretty much do it once it gets above about 50 cents. There is slippage, which is you can have a stop loss set and not get filled at that stop loss. It's not a guarantee that you're going to get filled at that price.
That happened to me. That sucks.
Yeah, it's terrible. And especially dangerous with halts. And some of these low float IPO debuts have had very violent halts. And you want to, trading the halt is almost an art form in itself. And looking at the level 2 data, understanding that you're not even allowed to set on most platforms a stop loss while the stock is suspended, like within the halt. But you can set a limit order. And just keep those limits orders low enough so that you make sure your order gets filled even if it opens up below the the halt price.
Yeah.
So AppLovin, and this is another thing that I try to pay attention to, is where was the IPO stock, whether an IPO stock was made available to the general public. And that means that sometimes E-Trade and Ameritrade and one of the other ones we look at is Click IPO. But when the main brokerages are offering an IPO to their retail clients, it's something I kind of watch out for, because the ones that have been very well hyped, like Qualtrics and Bumble, were both offered to eBay clients. I trade with eBay, so I get these offers. And I put in big orders. I said, oh, these are definitely going to blow up. We're going to get a premium on these. And I liquidated positions and put in a big allocation request. And the day of the IPOs, both of those got canceled. And it felt pretty raw. And it ended up emotionally affecting me in ways that I should have just stepped out of those trades. I actually did with Qualtrics, and then Bumble took my worst loss ever because I was completely mentally in the wrong position to play that after envisioning these huge win opportunities by getting the IPO price. But then when you actually do get the IPO filled, like with Oscar Health and with AppLovin and with DigitalOcean, we've seen in all three of those cases, the debut price was below the IPO price. So in some ways, it's a little bit of a red flag. If they do give it to the retail investors, it might mean that there wasn't as much institutional demand as they thought. It also might mean that when retail investors have it, they kind of have, you call it paper hands or whatever, but they might want to just sell and get out of it right away. So I try to be aware of that. It's a little bit of a red flag. That being said, there's one coming up this week that looks pretty interesting that was offered to retail traders on E-Trade, and we'll see if they fill my allocation, maybe that's a bad sign, and if they don't, maybe that's a good sign.
That's always like the double-edged sword of retail, right? If you see an IPO offered on one of these platforms, the question is, well, why? Like who already turned it down? You know what I mean? Like that's always the question you got to ask yourself. If an IPO is being offered to me, how far down the line am I?
No, I look at it that way. It's actually down the line. It's almost like we're at a big banquet table, and the royalty and the king and the queen are at one end of the table, and that's the big investment funds, and we're at the end of the table, and all the dishes start at the head of the table and work their way down. Mm-hmm. And if there's if there's still a lot of food on the plate by the time it reaches us, you got to wonder what's wrong with the food. Mm-hmm. And that being said, some of the click IPO ones, some of them are toxic and they just bomb. Others, like eBet, another one, that one was available on Webull, and I put in an allocation request for 175 shares, and they allocated 16 shares. So that was kind of like, I guess a lot of people want this one. So even requesting the allocations when they're made available can give you a good insight as to how much demand there is for the stock.
Sure.
So,
all right, wait. So what about this week? Yeah, let's get to it.
Let's get this week. Okay, I'll try to run through these quickly. Maybe I'll just skip the overview and go to the details of each one. We've got Troika Media Group, which is a digital marketing agency with offices in Los Angeles, New York, and London. They got a lot of A-list clients: Coca-Cola, Apple, Netflix. We don't know exactly what they do for them, but it's kind of like a web design company, and they probably do and video marketing, this kind of thing. They're decreased revenue from 2020 to 2019 due to COVID. They are a click IPO offering that's been available for about a week without being bought out. And the only reason really to take note of this is that it's a low float and people are talking about it on Twitter. I think it's worth playing just because with these low float plays, and we'll jump into the next one because it's in the same boat. Infobird is a Chinese artificial intelligence driven customer service platform. They do basically AI driven customer service, chatbots, things like that. Pretty small float, and Chinese IPOs have been, we have seen some insane, like UTME. We saw some insane runs with them. Not just UTME, we saw RLX, which is an e-cigarettes company, RAS, which is some cloud-based communications platform, TIRX. We saw a bunch of these just run like crazy. There's something about the Chinese IPOs that have been worth being in. This one does have decent financials and a chairman that was a former HP executive, so it's not as maybe unknown or just sort of people random. Just playing the hype.
Yeah, not as random, but still kind of random.
Yeah, exactly, not as random, and but. Again, on click IPO for over a week, but it's been talked about now because it got rescheduled for a week. It's been talked about since the UTME play. It got more hype after the eBet. So I think this one's maybe even more interesting, even though it has a higher float. My strategy for playing these is a little bit the same as what I mentioned before, but what I'm really looking for is that initial halt. So these have gone, almost all of these that have run have gone into a halt within the first about 10 or 15 seconds, which almost means if you have time to set a stop loss, set that stop loss right at your entry point, maybe a little bit below, but really at that entry point, because it's either going to halt or drop. And if it halts, okay, now you can play that halt. But if it drops, it'll drop fast. Like this will go, a lot of these have debuted at 8, gone up to about 8.59, and then just fallen out when they didn't halt. So you want to be in the boat. You don't want to be in the boat when it goes down. You want to be in the boat in case, the tide comes in and the wind picks up, and now you're sailing, and cruising. But you kind of, my strategy sort of breaks down to be in the game in case the game gets hot, but also be ready to exit.
Get the hell out.
Start getting dirty. Yeah. So, okay. The most interesting one in terms of, what the type of IPOs that got me into this strategy are high growth software stocks, and UiPath fits that model. Now, the big red flag here is it's a E-Trade offering. So I put in an allocation request and I'll see what happens with that. I can send out a news blast through my newsletter. If you guys sign up at IPOwarriors.com to the newsletter, I send out a comprehensive overview yesterday of all the IPOs for this week, and I send updates when things get rescheduled or as we learn things along the way, kind of supplementary to what we're talking about here. But what UiPath does is it's robotic process automation software. It's not robotics like Terminator type robotics. It's robotics like software bots that handle automation for banks, for insurance companies, where office tasks are being replaced with automated processes. And this has been a huge business in 2000. I left out a 0 there, but 2019 to 2020, the revenue nearly doubled. So they're up 90%. It's huge growth. They're profitable. Net margins from 2019 to 2020 went from minus 155% to minus 15%. And they just kind of made that step. If you remember, Google used to be kind of thought of as like, well, it's a cool company, everything, but they need some executives to really drive this into a corporate structure. So they just brought in that team in 2019, and that team has brought them public and is now kind of molding them into a more, I can't say serious, but corporate focused company. And the float is not huge for an IPO of this size. 21.3 million shares is on the lower end of these kind of established company IPOs. NeuroPace, this one's interesting. It's a commercial stage medical device that treats epilepsy. Some of these medical devices like NNOX have done pretty well on the IPO. The float is pretty small, 5.3 million shares.
All these floats you've given are small. That's a red flag to me, but that's just my take.
It's a red flag until everybody, it's just kind of like maybe a year ago, if a stock had a lot of had a high short selling interest, you'd say, maybe I don't want to go near that. Now it's, now there's there's a high short selling, buy. Like it's going to go to the moon. Everyone is going to buy it. Why? Just because it's a short, high short interest. So once these indicators become something that people key on, and because the low float means any sort of demand is going to push it up, people start keying in on this. And right now, at least for the last, I'd say 2 to 3 weeks, that has been the trend. And, the trend, as you have said many times, is your friend. Skywater Tech, this is a semiconductor foundry that is funded by the U.S. Department of Defense, which basically means they create microchips. And they specialize in aerospace, and also they do automotive, biohealth, and a bunch of other industries. This one's interesting because we're in a global chip shortage. If you're watching the news, you're aware of this. Car production is being held up. It's a national security interest, and the Biden administration has come out, I think it was last week or the week before, and put, supporting chip manufacturing into kind of the leading interest that the government is going to get behind. Again, just 5.8 million shares. So if any kind of interest or demand shows up, this thing has an opportunity to run. Double Verify, this is an interesting one because it deals with digital marketing monitoring and analytics for connected TV ads. Basically, they're making sure that the ad the ad spend that companies are putting into digital advertising is not being manipulated, that it's not fraudulent, that the ads are actually being served to users in a way that's viewable, meaning they're not being served on the wrong monitor sizes, or there weren't glitches when people were supposed to be watching an ad and they were charged for watching an ad, but actually maybe the viewer didn't actually get to watch the ad. They're making sure that they're delivered to the right person. They have kind of a Nielsen type rating for the performance of each ad. They can help predict the ad performance and ad enhancement. Beyond that, they're profitable and cash flow positive. There's this sort of rule of 40, which is that revenue plus EBITDA growth should be over 40% for a growth company, and it has a lot of backers in terms of underwriters. I like to look at who are the underwriters. If it's Goldman, great, that's a good sign. And if there's a lot of underwriters, then that means it's a pretty strong stock. Again, only 13.3 million share float. It almost seems like they are, like all of these companies are saying, hey, if we go with a lower float, maybe the IPO will perform better. And I'm going to ride that trend for now. If things change, okay. If they don't, I'm going to keep making profits off these trades.
All right, we're at the open here. Got wrap it up.
Okay.
A couple more.
Yeah, I'll just go play or pass. No B4. I'm going to pass on this one. It's a SaaS that trains employees to recognize cybersecurity acts. Yeah, cybersecurity is important, but it's really like a training seminar on how to, make sure that your clients know. Oh,
well, there's our bell.
Hydrogen, interesting. Biomanufacturing, Latham Group. They make swimming pools. Swimming pools, everybody's buying them right now. This is the #1 market share in every product they make. They're the largest in-ground swimming pool manufacturer and designer for North America, Australia, New Zealand, 20 million shares. Agility, medical equipment, maintenance, rental, and maintenance. Kind of boring to me. I think I'm going to pass.
All right, Matt Hammond. What that was quick, man. I like it. Yeah. IPOwarriors.com is his site. Check it out, Matt. Thanks a lot, man.
Sign up for the newsletter. Thanks, guys. Cheers.
All right. That's our opening bell, which means we are open. And yeah, how are we doing out there? I mean, let me look at my my charts. Yeah, okay. All right. So we're just we kind of leaked in the NASDAQ throughout the pre-market. Russell's flat for the moment. I don't know. Not much. Still early. All right, guys, that's a wrap. Smash that like button. Come on. Last I checked, we have like a couple hundred likes, which is not going to cut it for me. Not going to cut it. I need more likes. We're at 445. I need 500 likes, please, before I'm done talking. All right. As always, please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Catch a replay of the show in podcast form on all the major podcast platforms, iTunes, Spotify, SoundCloud, etc., etc., etc. Once again, today's show is sponsored by Market Structure Edge. Try the new way to trade, marketstructureedge.com. Thanks to our guests, Tim Quast and Matt Hammond. Thanks to all of you in our chats. Get Technical with Neil Hamilton is on right now, and I will see you later for next time I'll be on the stream, is in an hour, for the Benzinga Pro update. Have a good one, everyone.